Analysts expect Singapore's public housing resale market to cool further in the months ahead after prices grew 0.4% in the third quarter, the slowest pace since the start of the pandemic in 2020. It's also the fourth straight quarter of easing price growth. Alexandra Anand reports.
It's the first time since 2019 that more than 10 towns across Singapore, such as Bedok, Bukit Panjang and Jurong East, have seen resale HDB prices posting quarter-on-quarter declines. That's as overall prices have been on the rise for 22 consecutive quarters.
The demand is still up quarter-on-quarter, but at the same time, the prices itself did not respond in that same manner. Some flat types, we do see on average the prices staying relatively flat or easing by a bit in the third quarter of the year. That's why overall there is this, in a way, price resistant.
Analysts say the slower growth is mainly due to more competition with a larger supply of new flats, including those with shorter waiting times. Nearly 20,000 build-to-order and sale of balance flats were put up for sale in July and October. Still, they don't expect resale prices to shrink anytime soon.
Some of the very new flats in certain sought-after locations, we are still seeing prices growing, and there are more million-dollar flat transactions. But on the other hand, if we look at the older flats, I think they are coming into more price pressures, mainly because they are now competing with a lot of new BTO flats that have been launched, especially since many of these BTO flats, they are going to be launched within a shorter period.
Looking ahead, analysts expect prices to grow by 3 to 5% for the whole of 2025.
Slowing price growth also on the private home front, with prices up by 0.9% in the third quarter, a touch slower than the 1% growth in the previous quarter. Still, sales volume jumped nearly 45%, driven by new project launches. Over 4,100 units for sale, almost 3 times more than the last quarter.